let's just check. I'm just waiting for it to start on LinkedIn. The event will start soon. Wait for the host to start.
Yeah, take your time. I have plenty of time blocked off, so it should be all good.
Okay, we're on.
Alrighty.
Quite a delay, but we're on. Okay, so
a minute, not bad.
Okay, welcome everyone to Inside Startups. Great to have you here watching today. I'm really excited to have a special guest on today, someone I only met a few weeks through the wonderful tool that is LinkedIn, Ed Michaelson. He's got a fantastic story to tell us. So he's an ex-investment banker, ex-founder, and now he supports founders with their pitches to raise money and also to sell their companies. And the thing that I want to discuss, I think most importantly on this LinkedIn Live today, is how the hell has he managed to do all of that? And he doesn't have a single gray hair, or it seems to be losing any hair from his head. Like the stress of those 3 jobs, Ed, how have you pulled that off? That is a LinkedIn moment in itself.
Indeed. Well, yeah, first of all, thanks for having me. I mean, it was all the stuff that you just described is over a multi-year period. So when I was in investment banking, it was in my early 20s and we were working those long hours, but I felt kind of invincible at the time, just like many investment banking analysts do. And I transitioned out of that after 3 years and went into private equity and then ultimately the hedge fund space, which was also quite demanding, but not nearly the level that you see in investment banking.
Right. Okay. Well, I'm glad that you have managed to keep a full crop, unlike myself. So in today's show, we're going to cover a few things. I want to start at the very earliest point of your career first, Ed. I want to delve a bit deeper into what you did with Deutsche Bank and how did you end up in Hong Kong? How did you end up with your first startup? We made it clear from anyone watching that there's some scars that came from that first startup, and with scars come quite often the best lessons learned. So what you took from that and how that's then transitioned into what you do today. So if you could kick it off by, just tell us about that first part of your career. Why investment banking? Was it the checkbook? Was it the dollar sign? Or what drove you into that? And then what took you over to Hong Kong?
Yeah, for sure. I mean, my reasons for getting into investment banking were pretty commonplace, as were my reasons for ultimately leaving finance and going the route of the entrepreneur, so to speak. Definitely the money was compelling, but also I just didn't really know what I wanted to do. And you're going to develop a pretty strong work ethic in investment banking and learn a lot about business at a high level. Like I think for college students who really know what they want to do, which I think is a small minority, maybe investment banking isn't the right choice. But for me, who didn't know what I wanted to do, it just like opened up a lot of doors and gave me a lot of credibility. So that looking back is like the real reason I went into it.
Yeah, I think it's a great grounding. I did management consultancy in London for a short period, either side of my engineering parts of my career, and the hours, the intensity, everything in that, it builds some steel into you. Once you've done those hours, the long weekends, and you're doing it relentlessly for a period of time, it takes you from being that goofy student that was enjoying university to, okay, now I've been kind of conditioned, ready for what's in front of me. And it gives you a network as well, doesn't it? It gives you a lot of powerful relationships.
Sure.
So Deutsche Bank, and then after that you went over to Hong Kong. So what took you to Hong Kong in the first place?
Well, after Deutsche Bank, I stayed in New York City and went into the private equity space. So it was like a very traditional investment banking plus private equity, 3 years and 2 years program that a lot of people do. Like moving to private equity is compelling because you get to be on the investment side. It's like more critical thinking intensive. And, it's potentially like a very compelling long-term career path. And if I'm looking back, like, honestly, I kind of pedestalized that before I had like a real understanding of what it entailed, like going into private equity. And when I got there, it went pretty well. I worked at a great firm with a lot of really smart people, but it just wasn't all that it was cracked up to be in my mind. And like, I'm getting into my late 20s at that time period and starting to like slowly begin to mature as a professional. And, that experience taught me that like, maybe I don't want to be in finance long term. So that train of thought aligned with this like bubbling desire to move to Asia. Just to answer your question about Hong Kong, I studied abroad in Shanghai in college, and I got quote unquote the Asia bug, so to speak. And I was like, I love traveling. It's one of my biggest passions, and I'd love to move there one day. But in favor of investment banking and like going to Wall Street and building my career, I kind of tabled that idea. And then as I was kind of starting to become disillusioned with finance, that intensity around finance started to become replaced with an intensity and a desire to move out to Asia and kind of like live that dream. So in the summer of 2018, at the end of my private equity analyst program or associate program, I shipped out to Hong Kong and stayed on a buddy's couch until I found a job, basically. And it took me about 10 months.
We share a bit in common there, because I went to Asia. I did a bike ride from Vietnam to Cambodia for charity. I got the Asia bug, came back from that trip and told my employer at the time, I want to move to Vietnam. I've fallen in love with the place. I need to get to Asia. I can either do it on your train or I'll find my own train, basically. But one way or another, I'm going to Asia. And fortunately, I was able to go with that company, and it was truly an incredible experience to go from Western world to Vietnam, to be working around that region, and the culture, everything is just so different, and it's really exciting. Like, I really love the buzz that you get from being there. Hong Kong, I spent a bit of time in because, and we'll come on to it, like you, my first startup was registered in Hong Kong, actually. So I had one in Hong Kong as well, but I wasn't there so much. I was in other parts of Southeast Asia.
Asia is an intoxicating place. Like, anyone who's been there knows that. And I think if anyone has a desire to move to Asia, regardless of what age they are, and they can swing it, I think that they should. Like, it's just incredible,
For sure. So your first startup was in Hong Kong. Tell us about that. Where did the idea come from? Where did your co-founders come from? Did you meet them in the US and they come with you, or you met them there? How did all of that come to life?
For sure. I think just as a quick bridge from me moving out to Hong Kong to doing this, to the first startup, that was like a 4-year period in between. So even though I said I was disillusioned with finance, my goal was to move out to Asia and get a job. And the highest likelihood of me doing that was staying in finance. And Hong Kong has like an incredible financial services industry. So I was looking for something different than private markets investing. And I started to look towards public markets, and ultimately got a job at a hedge fund there. And I was there for 3 years, both on the trading side, the proprietary trading side, and then on the investor relations and fundraising side. And once I got my feet on the ground in Hong Kong, I kind of got to cruising altitude in finance there. I built a network, was doing pretty well at the company. And I started to get this like lack of inspiration and felt that I hit a ceiling. I was no longer intellectually stimulated. And, for lack of a better word, this is very common among people who choose to be entrepreneurs. I just got the strong desire to work for myself, which was in the back of my mind probably like all my life, but I never really took seriously that was like a legitimate path that I could take. And so I was like, I'm not going to quit my job immediately. I got into the whole side hustle game, started with like a couple projects on the side. Most of them didn't work. And then ultimately one did start to work. And that business got enough traction that enough traction to justify leaving my job at the hedge fund. And then I worked on that business for 2 full years in Hong Kong. So I'm happy to tell you a little bit more about that company. I just thought that bridge would be helpful.
Yeah, sure. Now, what was some of the other side hustles before we get to the main one? What were some of the other things?
Oh man. One, this is so classic. One was your classic drop shipping store. So I started this company called, or not really a company, it was like a website called partyfunhouse.com. My buddy of mine had the domain. I was just like so hungry. I'm like, all right, what can we do with this? And in Hong Kong, Halloween is like an incredibly big holiday. In the UK, they call it fancy dress. And like in the US, like people just dress up for Halloween. So I set up this drop shipping store importing costumes from China into Hong Kong and just like blasting people with paid ads and selling them costumes. And that actually aligned with when the show Squid Game came out on Netflix, the first season.
Yeah.
And ultimately, my most successful ads were just like carousels of Squid Game costumes. And I would just direct people to my website, then fill orders via Shopify in the back end manually. And like, I made a bit of money actually, but it like totally wasn't sustainable and didn't justify the amount of work I put in, but it was kind of a fun learning experience.
That's what the early startups are for many, you know, that most of those first one or two is like, it's all about the experience of doing it, making a lot of mistakes along the way.
Oh, you don't know anything. No. Like another like interesting point, as I look back on my experience, I had come from this like 10-year stint in finance and high finance. I'm working with like big companies doing like big deals in many cases. And, you know, I wasn't really arrogant, but I definitely was like, I have the credentials and the qualification to go off and make a lot of money on my own. Like I legitimately thought that. And then diving in is sort of like a big dose of humble pie and teaches you that like your corporate skill set, while it may teach you about the fundamentals of business and finance and how companies operate, those skills don't really transition to starting a business and generating interest and creating, like capturing people's attention and so on. So that was definitely one of the most interesting takeaways.
I can really relate to that, because the corporate job I had before my first startup, I was regional director for a big engineering company in Southeast Asia. So I was overseeing teams in Indonesia, in Vietnam, in Thailand, I think South Korea, Malaysia. So it's a big portfolio of projects, teams, multi-million-dollar deals. I left that and I thought, if I can manage that, I think I can manage a consultancy. And the first startup made it worse, because the first startup was a success and I got an exit out of it. And it was like, oh, this is easy. So I was right. The second one crashed and burned, a horrible death. And it was like, okay, now I've been grounded. And now I really realize how difficult it is to do a startup. But there's not many people that have luck with the first one. It's usually the first one is like, you know, it crashes and burns horribly. So tell us about the main startup you had then. Let's hear about it.
Yeah, so this was a company called Chow Time. It was a QR code mobile ordering and payments business for restaurants. So it was your classic, you come into a restaurant, we had two product modes, one where you could place your order and pay when you arrived at the venue, like before the food actually came, and then another, and that was predominantly in like casual dining restaurants where they didn't really value the interaction between the guests and the staff as much as like sort of a more upmarket restaurant. And then we had a more upmarket product, which we called Pay Only, which allowed the guest to pay the bill via a digital receipt at the end of their meal. So the whole interaction between the guests and the staff was preserved throughout the duration of the meal. And we just took out the manual component of hooking up the check and collecting money and so on, and alleviated some of the staff pressure we saw at those restaurants. And it was a payments processing model. We processed payments with Stripe, and our business model was to add a markup. And in the early days, our core metric was GMV, like how many dollars of payments could we process? And then ultimately, we wanted to generate net revenue, you know, based on a markup over our base cost of processing payments. But for a number of reasons, which I could get into, we never got there. So that was kind of the high level description of the business.
When was this project? Was this pre-COVID or just
post-COVID? Post-COVID, and that's a interesting point, because pre-COVID, this technology kind of existed globally, but didn't really get a lot of traction. And then COVID really catalyzed adoption by both restaurant guests and restaurants around the world, particularly in developed markets. Like the big ones were US, UK, Europe, and Australia. Like those are the biggest markets where you saw this technology. But even with the onset of COVID, we saw Hong Kong and broader Southeast Asia as pretty early on the adoption curve. And there were a couple of existing solutions, but they were really bad for a number of reasons. And we thought we could come in and plug that gap and build like potentially a modest business around it. And that ended up not being the case.
Yeah, I lived in the Philippines for more than 5 years, and there's no shortage of staff in restaurants to take customers' inquiries. I mean, they get them wrong quite often still, but the labor's so cheap there that to introduce a technology solution to do some of that, I can see being quite difficult to bring that to market. But like you said, the US, the UK, I'd imagine other parts of Europe, that potentially would have had better legs for it. It's really interesting how location plays such a critical point in the success of some startups, like your case there with the one in Hong Kong. The second startup for me, Bold Native, which was a consultancy, it was doing well in the Philippines right until a president came in and changed some laws, and all of a sudden the service that we were offering was no longer allowed in the Philippines, which is a financing modality. And I think not many founders would immediately think, oh, do I need to consider country risk in what I'm developing as a product? Like, is this even important? Like, for most founders, it's just like problem, solution. Yes, let's make this work. But all of that stuff around it, it's kind of it's an afterthought, isn't it?
Yeah, I think for us, so to your point about the Philippines, where there was like no shortage of staff, it was actually the opposite in Hong Kong. There was like extreme staff pressure, and one of our core value propositions was alleviating that. And we also saw Hong Kong as a friendly regulatory market. So on the surface, we didn't really see much country risk. However, once we built the business, we realized that there was some fundamental country risk around the pricing environment. So basically in Hong Kong, as you know, just broadly speaking, restaurants are very low margin businesses. That is a particularly acute problem in Hong Kong, where rents are extremely high and like the cost of labor is also relatively high. So a lot of the customers we were selling into were low single-digit net margin businesses. And you think about what is their offline cost of processing payments, it's around 1 to 1.5%. The online cost of processing payments in Hong Kong was much higher, like call it 3.5% in some cases. And that difference between 1.5 to 3 or 1.5 to 3.5% is a huge portion of their very small net margin that they're running on, right? Yeah. So what ended up happening was there was no appetite for these restaurants to accept an additional markup so that we could be profitable at the unit level on day one. So we ended up giving the solution away for free and just passing through our cost of processing payments. That was kind of cardinal sin number one. Our thesis was that if we acquire enough volume, right, get enough venues on our platform that we hit certain payment processing thresholds, certain GMV thresholds, we will access volume-based discounts from our processor. Our payments costs will go down. We'll maintain our cost with our pricing with restaurants, and our margin will expand over time. This is a classic margin. The margin will come with scale fallacy. It's conceivably possible that could happen, but I see this all the time now with founders today in my current business. People are like, we will be profitable once we get scale. One of my biggest takeaways from this business is that you don't necessarily need to be profitable as a business on day one, but your unit economics must be profitable from day one, from the first customer that you take on, right? Because if you're not, the chances of you being successful go down so meaningfully because you're not generating cash to reinvest in the business, and you ultimately run out of money. And that was compounded by the fact that we were outsourcing development of our technology and had this huge burn rate. So that's probably my biggest takeaway from the business. And I thought that was pertinent relative to your comment about country risk.
Yeah, because you didn't have any techie co-founders, did you? You were
No, it's a huge mistake. I would never do that again. Honestly, if technology, if you're building a software platform or product, or even if you're not, but technology is like core to enabling your value proposition, it's just you're just choosing an uphill battle and making things harder than they need to be and harder than they already are by outsourcing development and not having someone on your team, or at least incentivized with equity, who can write the code to get the product into the market and validate your business. Like, I feel that's like something I'm quite dogmatic about these days, but I see it all the time. People are outsourcing development. It's tempting.
We're going to have AI agent co-founders in the next few years, aren't we? Where it's the business person and the co-founder is actually an AI agent doing the technical work for them. Like, you can see that.
I could see that as being doable, especially like just to get like the initial iteration of the product out. And like no code tools are also totally acceptable as well. But like once you get to a place where you need to start building custom features and scale, there's this like weird no man's land where paying someone to develop your software for you just decreases your likelihood of success so meaningfully.
Yeah. Okay, so let's move on to what you're doing now then. So you've obviously had your investment and PE funds background. You've had your side gig startup, which sounded fun, and the main one. Lots of lesson learned out of that. What is it you do today then, Ed?
Yeah, so now I help early stage software founders, so SaaS founders, pre-seed and seed, position themselves for investors. I've raised a lot of money in my career, both professionally and like for friends and like for my own startups. I've gone to market a number of times,
Yeah.
and I have that skill set. I've been relatively successful, and for my next business, I wanted to do something considerably lower risk than like building a product, right? That requires a ton of upfront investment. And I just wanted to preserve my ability to stay in the game, so to speak. So I just looked to services, and this was the service that I could offer people the fastest. And it's kind of morphed into kind of its own little business.
Do you think you'll ever go back to founding another product-based business?
100%. Absolutely.
Yeah.
Like, I don't think that what I'm doing now is, my ticket to long-term time freedom or my ticket to, long-term wealth creation on autopilot. But what it does do is it preserves my ability to like not have to go get a job.
Yeah.
And there's a lot of skill acquisition associated with building a services business. And ultimately, when I get this business to sort of a cruising altitude level with, implementing some degree of automation, and I can get it to sort of like a side business kind of place, my intention is ultimately to go do something more lucrative.
And you're going to be learning a hell of a lot as well from all of the pitch decks and founders that you support as well, because whilst they're learning a lot from you, every time you get the visibility of someone's product and how they're approaching it, how they're, structuring their cap table or their pitch deck or their strategy, all of that is it's really interesting learning for you as well to take forward into a project yourself in future. I mentor founders, and as much as me giving stuff to them, I come away sometimes thinking, well, that's really interesting. I think I've learned something there as well. So what's the sort of main issues that you see with pre-seed founders, seed founders trying to go out and raise money? What are some of the key issues that come up sort of time and time again?
Well, the list is very, very long. Are we talking specifically around like how they build their investor pitches or how they're reaching out to investors and approaching fundraising? Like, there are a number of different mistakes I see in each of those categories.
Let's start with how they put their pitch decks together and then move on to how they go about actually finding investors. Because I think that is certainly from the people that I speak to, why people come to me. It's like, how do you find investors? And it's like, so let's start with the pitch deck though.
For sure. The list within each of those categories is very long, but I think the number one problem I see with people putting together their presentations for investors is they fail to contextualize their problem effectively. Mm-hmm. And that is so problematic because if you don't have a compelling narrative around your problem, everything else in your deck, even if you have traction, you have a great description of your solution, type business model, huge market, like all the things you want to see, all of that stuff gets undermined if you're not solving a super compelling problem. And like a lot of people, like I honestly don't think saying XYZ is a problem is enough. I think it's much more compelling if you can put some context around why it's a problem and what the impact of the problem is. Because if you can't quantify what the impact of the problem is, like that's what directly correlates with whether or not customers will pay for your thing, right? And I see a lot of people in these decks, like just claiming these, what seem like compelling problems, but it's just like a lot of hollow text when you like peel back the onion a little bit. And once you dig into like what's actually happening, why the problem is a problem, what's actually broken in the industry that they're targeting, or like the customer journey that they're targeting, or whatever it may be, you find out that the problem is actually not that acute. And, if it's not that, like there are a lot of problems I suffer from that I'm not going to pay for a solution to fix just because they're not that annoying. And that is probably by far the biggest mistake I see in pitch decks. And it could be like a pitch deck mistake, or it could be like an underlying business mistake. Like you should be pursuing a different business.
Yeah. I mean, I think when I look at certainly on like enterprise B2B type deals, the problem statement, the thing that I always look for is, okay, did a customer tell you that this is a problem, or if you come from industry and you think it's a problem? Because if it's the latter, it's quite dangerous in my experience, because then you get founders building in a vacuum. They're solving a problem that they've seen, that they felt a solution was needed for, but until they've got that ratified by other people, other potential customers that have said there's a willingness to pay, it's just a problem that you're solving because it annoyed you. And I think that's a really dangerous play. Someone else, sorry.
I would just add, for people like yourself and like me, it's kind of hard to say something like super unique and insightful, because a lot of the tried and true startup advice is tried and true for a reason. Like, I can't talk to your customers, right? Like, I'm not going to keep preaching that because everyone knows that's what you have to do, but a lot of people just don't do it. I see it because I see the decks that they're building and so on. So,
Yeah, I was talking to a founder this morning, and they've got an AI product, SaaS AI product. And as I was looking at what they've put together, I was thinking, one of the things that's going to come up more and more and more now, because of the prevalence of GPT, of Claude, of Llama, and all the other things, is how big is your moat before these guys just catch up and swallow whatever it is that you've come up with as an idea, whether it, like Firefly is the meeting recording tool, or Calendly for meeting bookings, or, whatever it is, Grammarly, because I'm dyslexic, so Grammarly helps. All of these are just getting substituted at a rate of knots, because these other products are just bringing out the next feature, the next feature, the next feature. So is that something that you're starting to see in DEX now, like that specific thing is a risk, and how they deal with that to maintain a moat? Are you seeing more of that yet or not?
A little bit. I don't want to say I'm not seeing it, because I am, but a lot of the, refreshingly, a lot of the AI, compelling AI tools that I see seem to be doing things that, my gut tells me are not likely to be folded into the GPs of the world anytime soon. For example, one of the best decks I've seen in the last, this year, is a company called RAG Metrics, RAG Metrics. And you can reach out to them on, anyone who's listening to this can reach out to them on LinkedIn. I thought it was a really compelling pitch, company, et cetera. They have a SaaS tool that is, they sell their tool to people who are developing AI applications, and their tool audits the quality of their LLMs, of the customers' LLMs that they're building. So it's kind of this weird meta AI concept. But that's not something, maybe my knowledge of AI is not that strong, but it's not something that I see the GPTs of the world building a super specialized product for anytime soon. I could see a standalone business being built around that and then getting acquired by an OpenAI or something like that. But that just comes to mind because it's relevant to what you were saying, and it was one of the more compelling decks I've seen all year.
Yeah, no, it sounds really interesting, actually. I'll look that up myself afterwards. We've only got a couple of minutes left, and I really want to ask you about your pitch deck roasting that you did, which I think is, as a founder of someone that's had 4 companies, I kind of welcome a roasting of my pitch deck now, because I think I've been through it enough to be like, no, please roast it, because this is really the best way to learn. But I can imagine as a first-time founder, I'd be like, please don't be too mean. I've spent my life putting this pitch deck together.
Oh, yeah.
Honestly.
Yeah, I have ample thoughts on that. But I'm happy to give you a little background on that business.
Sure, go for it. Yeah.
So just in getting, as I started this early stage SaaS fundraising services business, I was launching a big cold email campaign. I needed a lead magnet to get clients. So I started just saying send me your deck and I'll record a video of me just talking through it, a page flip. And it was meant to be a lead magnet, and it was very, very successful. I did not expect it to resonate with people as much as it did. People felt that it was very personalized. It allowed me and my personality to shine and everything like that, and show people that I have some degree of competence in this space. And I had done 50 or 70 of them, and they converted to paying business at a very high rate. So I decided one day, let me just ask someone to pay for it. And I received 0 no's. I got 5 people to pay for it and made like $1,000 or $1,500 or something. And I was like, why don't I try turning this into a digital acquisition funnel? So while the service is still the same, how I acquire customers is different. Right now I have a website called roastmysaaspitchdeck.com, where I drive traffic to the website, people send me their deck and pay me, and then I send them this Loom video ripping apart their deck and giving them actionable feedback. That the same way I was doing when I was using it as a lead magnet, I'm just turning it into kind of its own standalone paid service.
I think it's really cool. I think it's a great idea. When I saw it, I was like, you know what? this is what founders need, because they need that brutal open clarity that they would get from something like this. Because as you know, Ed, like VCs don't always give feedback. Sometimes they're just like, no, pass, I haven't got time. And if you've got an independent party that has been through it and can give some feedback, and you can learn that from, like, when I speak to founders, I'm always like, the first handful of investors that you speak to, these aren't the ones that are going to invest. These are the ones that you're learning from. You can give them your deck. They're going to hopefully give you some feedback so you can learn from it. And then the next 5, you'll do a bit better. Probably you're going to speak to like 25, 50, maybe even 100 though. So let's just use these early ones to take some learning and go from that. But with your site, and you having looked at how many have you looked at now? Do you think 100?
Oh, I see like 30 a month basically now. And I've been doing this for like almost a year. So I don't know, hundreds of decks.
Yeah, there you go. So you've got lots to give to founders in terms of feedback, and that's incredible.
Yeah, thank you.
Ed, it's been a real pleasure having you on today. We'll have to do this again, I think. I think you and I talk for a lot longer and delve into more topics. So, but for today, thanks very much, mate. It's great to have you on, and I hope everyone that's been listening really enjoys this.
Sure thing. Thanks for having me, Ben. Hope to do it again sometime. Take care.
Cheers, Ed.
Alrighty.